Hello, good afternoon. You're watching Closing Trades, and what a good afternoon it's turning out to be. Officially, per se, the first day of the financial year, or the calendar year rather, given the fact that yesterday it was very low volume, but today we are logging one of the biggest single session gains that we have seen in a month. The Nifty up almost 400 points from the lows of the trading session. Bank Nifty higher by 500 points. And then, of course, you have the Sensex, which has managed to gain almost 1300 points. A solid recovery across the board that we are witnessing in the markets at this point of time. Nifty Auto, that one is the one which is charging ahead. I think almost a 3.5-4% gain coming in as far as Nifty Auto is concerned, and the biggest intraday gain again that we have seen in 7 months. It's been led by Eicher Motors, no doubt, given the big outperformance we have seen and the big beat coming in the December auto sales, wherein the numbers came much ahead of expectation. That stock is up 8%. Maruti is up 5%. The management did speak with ET now, and they talked about how the inventory has come down in the system. So that stock high by 5.5%. Ashok Leyland up for you on the screen. That stock too reported better than expected numbers. So whichever company actually beat the expectation in the month of December is something which has been doing well, whether Eicher, whether Ashok Leyland, and the commentary coming in from Maruti as well. So all of these stocks are doing quite well. IT, a couple of brokerages this morning came out with their notes talking about how we should look forward to maybe FY26 now. They were hopeful of an upgrade coming in for guidance from the likes of Infosys and HCL Tech. And there you have it. There is a bit of a positive reaction on Infosys and HCL Tech. If they do increase their guidance, which the expectation of a couple of brokerage houses is, that would augur well for the entire IT pack. It's green across the screen, maybe barring a Nifty Media, which as it is forms a very small portion of business per se, is in the red. But it's Sundaram, it's Bajaj Finserv, Bajaj Finance on that positive catalyst note coming in from Citi. Petronet LNG, which was down 7-8%, has recovered from the lows of the trading session. That after the company clarified to the exchanges that perhaps what the street is worried about are the PNGRB note coming in and the regasification kind of amendments that they're expecting might not happen immediately. So Petronet to Aisha has managed to recover, but I think it's the vibrancy of the frontline index that really deserves mention today.
Oh yeah, absolutely, and would be very curious to see what the FI flow figure is today and whether it's a resounding buy or not. But look at the comeback in autos, for instance. Even though it's been a mixed bag, but the way the street is actually betting on these names, there's been, of course, good response for Eicher Motors for its new launches. They aim to sustain the growth in 2025. They're saying that exports have risen a good 90%. To about almost 11,575 units. But Eicher, of course, is leading the charge, as was the sporadic case for the last two trading sessions as well, or pretty much throughout this week. 8.5% is the kind of tear that you're seeing on Eicher alone. Maruti as well, it was a beat on the December sales, about a 5.5% uptick there. Bajaj Auto, even though the numbers were disappointing, the stock is holding up 4% as we speak right now. IT, there as well, you are seeing some amount of bounce after getting beaten down for the last 2 to 3 odd trading sessions, led by Infosys, which is currently up by about 3.5% as we speak right now. But good time then to bring on board our experts and figure out what is it that they're making of the markets right now. Naresh, first to you, what a stupendous turnaround. Finally seems like everyone's back to work with this 350-point uptick on the Nifty.
So it looks like a fresh year with fresh momentum out here. And we are seeing good volumes also today. So that's interesting. And large caps have finally woken up. So that 24,000 mark, which was there on Nifty, has been taken out today. We are yet to take out that 51,800, 59,900 mark on the bank Nifty. If that happens, that confirms more. So this could be a range shift for the short term, 23,800, 900 on the downside. 24,400, 500 now becomes the target on the upside. And today, small caps have not really done 0.5% uptick only over there. So from tomorrow, we need to see if small caps also do well. But structurally, today's tick is a good indication.
Sure is. And Sandeep, hi, afternoon, and wish you a very happy new year, first of all, from all of us.
Same to all of you. Hopefully, you'll have a great year.
Yes, hoping that. But Sandeep, what a comeback then. Nifty's already surpassed that 50 DMA level, and, the charge is clearly led by autos and financials all through and through. What's the expectation and why this uptick? Because the auto sales numbers were at best a mixed bag.
See, I think we need to buy when things get cheaper, and then the uptick comes, and it's very tough to find reasons for that. But the whole point is that I think I'm going into 2025 with a glass half full attitude rather than glass half empty, because although valuations are slightly higher than long-term averages, there are a lot of things which can drive things higher. We could see strong rural recovery. We could see urban recovery come back. We could see continued capex cycle by the government. We could see monetary policy easing. So I think there are factors at play which could play out positively. On the flip side, any significant deceleration in growth globally could impact Indian markets also. But overall, given the fact that last 3 years, if you see the Nifty's average CAGR return is just 8-9%, there's no reason to be excessively negative. So, like you were talking of auto. So, auto stocks, if you look at them, most of them corrected 30 odd percent from the top. Now, once the stocks have done that, then if there is news flow or numbers which indicate that a possible bottom is in place, then the stocks typically tend to move higher. And that's something what we are seeing now. So Maruti numbers are very strong, and the outlook also looks decent. And auto companies also already had the advantage that input price pressures were pretty moderate. So if there's a volume uptick also combined with that, then that creates a huge operating leverage. So I would be positively inclined on autos in general. Uh, M&M continues to do the best. So, and that's also near a all-time high, but we continue to hold that. Maruti and Bajaj Auto both look decent to me.
Autos looking at them favorably, and since we are talking about Maruti, hear out what the management had to say, because they're talking about a bit of a revival in the smaller car segment, which was the pain area for them, and the inventory levels have come down.
We did an all-time high record of doing a retail sales of 2,52,693 vehicles. And in fact, in this calendar year also, we did an all-time high record of retailing 17,90,000 vehicles. This has been the highest ever. Before that, in 2018, we did the numbers. Previous high record was in the 2018. Primary, I think all our models, starting from the premium hatch, entry hatch, MPV, SUV, van, all cylinders were fired actually in order to achieve this magical number. Our endeavor is always to offer our customers at a very competitive price, but nevertheless, due to different regulations which are need to be implemented as per the law of the land, we try to, as much as possible, to absorb the prices, but after a certain stage, we need to pass it on to our consumers. So our finance team is examining it, and very soon we are going to announce the price increase for the models. And if you see in this calendar year, the growth was around 4 to 4.5%. So since we are coming on a high base, it is in line with what was the forecast which was done by the SIAM in the beginning of the year. So I think we should be going steady. In the month of January, starting from 17th onwards, in Delhi, we are going to exhibit our first electric vehicle. We are not only going to showcase the product, but we are going to showcase the overall ecosystem, because we feel just providing the product to the customer is not going to help us, but we need to provide him a complete solution. So be the ecosystem. So I would request the viewers, please come visit us, understand how we are going to change the landscape of the EV industry.
Right, okay, that's the take coming in on autos. Clearly, quite a bit of buoyancy and confidence is what Maruti Suzuki management is showcasing, being clearly felt in the stock price as well as we speak right now. But other than that, of course, while it's all guns blazing, Sandeep wanted to analyze the prospects of IT, because soon we're going to be staring at numbers. The street still seems pretty divided on, the services faction of IT. Would you say, is it a complete exit? Look at some of the niche plays, perhaps enablers of AI, or would you say services are those core portfolio themes and you can definitely have some exposure to that?
The IT being a technology sector, there'll always be opportunities for those who can discern and actually come out with companies which could be benefiting you to AI investment, some specific investment in specific sectors, or doing some kind of different work which uh, would be which could grow parabolically. But those would not be the top tier IT companies because they are large, they are largely service driven. So even if they do something innovative, its impact on their overall business will be moderate. As things stand now, all the Accenture's numbers did indicate some sort of uptick, but uh, it will not be so significant to drive stocks substantially higher. Now, one thing which could come to the benefit of these IT companies, which was missing for the last one full year, would be the weakness of the rupee. Like the rupee was down just 1.5% over a year till November end. And after that, it's declined by nearly 2%. And that aids their operating profit margins, and which was not there in the last 1 year. So I think that could help their profitability overall. So, and that is something which could possibly create a positive uptick. On pure business side, I don't see any significant uptick in the near term.
That dollar strength, which is causing a bit of an FI outflow in any case from India, might just be supportive of some of these export-oriented sectors like IT and pharma. But on that note, slipping into a very short break, great momentum at play. Don't go anywhere. We'll track that and perhaps 24,200 when we come back. Welcome back, and that momentum really sustains. So now 24,180 at the index level. We were discussing financials at length, Sandeep, but I wanted to specifically point out some of the NBFCs. I mean, take a look at Sundaram Finance, up 11%. Bajaj Finance having that stellar run after that City Positive Catalyst watch. They are expecting a bit of a pickup when it comes to the NIMs. Chola Financials, Chola Investment, both of those stocks doing quite well. Even Indiabull Housing or AK Saman Capital is something which is riding very well on momentum. What about NBFCs? Would you prefer them over banks, or within NBFC, how would you segregate the various sectors?
NBFCs tend to be bigger beneficiaries in an easing cycle because they don't have the benefit of CASA deposits. So, and they are largely bulk borrowers. So whenever there's an easing cycle, they tend to benefit more than banks. Secondly, you need to buy NBFCs or financials during times of pessimism if you believe that the balance sheets are not going to deteriorate significantly. And I think relative to any previous cycle which we've seen, I don't see the NPA uptake being even comparable. I think there'll be just very small uptick, and that by and large is factored into these stock prices. So if you look at it holistically, I would think that in 2025, and there's a high possibility NBFCs could outperform banks.
And would you have a preferred list there, Sandeep, within NBFCs?
I think a lot of these names which Anisha took, I think all of them should do well. On besides that, there are other pedigreed NBFCs like L&T Finance or Mahindra Financial. Those are also subdued in terms of stock prices, so they could also be in the list.
Defense. I mean, yesterday, of course, it was Minister of Defense talking about how 2025 is going to be a year of reforms for defense pack. Do you anticipate that could, be the starting point for a lot more orders?
I think order flows have been strong incrementally. For orders to grow, that same kind of opportunity might not be there, but they'll keep on growing. So a lot of these financials, I would think that still have some phase of consolidation to go through because they have, even after the correction, the run-ups have been pretty severe.
Sandeep, how would you now sort of map the entire hotel sector? You know, Elara has come out with a very recent note. They've, of course, spoken about Indian hotels in particular, but they're talking about as to how the events in the fourth quarter are only going to propel the growth for the sector. Holiday cheer, of course, is going to rub off on Q3. And, you know, I think the signs are pretty much out there, be it the air traffic data or anyone's personal experience when it comes to domestic travel as opposed to the immigration queues. But do you think much of the positivity is now baked into the stock prices already, and you can't add a fresh even add to the current positions within the hotel sector?
When you're holding winners, the only thing is that whether you should sell them. So I would think that whoever is holding, they shouldn't be selling them. When to buy them is whenever there's some negative news, negative correction, some negative data point. That's the time to buy. I would think that next 3-4 years will still be good for hotels, given the demand supply imbalance and the growing propensity for domestic travelers to stay in many of these hotels and vacationing coming up. I think Indian hotels, the management is very good. I think their growth path is something which I think Nikunj has also talked of with the CEO several times on the channel. I would think I would remain positively inclined. Valuations are obviously stretched, but I would not sell. The other hotel stock which we own is Lemon Tree. That's not done as well because they are not into conventions or weddings or these kind of things. But that could also because it's not done as well, so the potential for gains is still there in that. So these are the two hotel stocks which we hold.
An option to own one more if you want a pure play hotel company, and that's ITC Hotels. That gets demerged per se on 6th. We'll get to know when it actually lists as a separate entity, but that's something to watch out for as well. But Soni Patnaik also joins us on this show. Thanks, Soni, for patiently waiting by. Help me understand what to do with a dip on Petronet LNG as well as the spike that we are seeing in Oil India right now.
Hi, good afternoon, everyone. Thank you for having me on your show. So, if we talk about Petronet, then we can see that there's this immediate support of around 315 odd levels. So, if it's able to manage to hold on to the support level, there's a possibility of a bounce back towards 340 plus levels. I think that's the range to look out for. Not a lot of data that is getting added to Petronet today, so it's difficult to say whether you would see a spot or recovery immediate from immediate levels, or whether it tests the 323.15 range and then sees a recovery. But as of now, there are fresh shorts getting built up for this stock. If we talk about oil, then oil has been adding continuously very aggressive long positions for the past 3 days, and the stock is looking quite strong. It has managed to cross its major moving averages as of today. So oil stands positive for testing 485 to 500 range with an immediate support of 440.
And actually, Sandeep, on that note, we'll let you go. Thanks so much for making time and speaking with us today. But Soning, coming back to you on the markets, because we have managed to surpass 24,200 at the index level right now. Does it look like a case of short covering, or do you think there are fresh positions perhaps on the long side being added? What would you call the sustainability of this rally?
We can see the market sustaining the way it has rebounded from the 23,600 support levels. That was on the back of rollovers matching for January series, which was indicating that a short covering move was expected in Jan. So it's not a surprising move that Nifty has actually managed to hold on to the support levels and taken out the resistance. In fact, for the next coming days, there's a possibility for Nifty to test higher levels of 24,500 to 24,700, and that's the range to look out for even in Jan series. There could be some small corrections from current levels. Maybe it again comes down to 24,000, then takes a higher, recovery from those levels. But as long as you see the dip towards 24, on dip from those levels and look for higher targets towards 24,500 to 24,700 for rest of Jan series.
Very stellar kind of rally which is underway. 80,000 as far as the Sensex level is concerned. 24,200 scaled yet again when it comes to the Nifty, and even the mid-cap and the small-cap index is doing quite well. It's up 1%, not of course as well as the frontline index, because that's tracking a gain of almost 2% versus mid-cap being up around 1%, but solid run across the board. Nuresh, what are the levels you are tracking? 28,500, what Soni was talking about, is it likely to happen in the first half of Jan itself?
Oh, so that would be 24,500. I would love 28,500. But if you look at the range, we've seen 23,500 to 24,000. So this has been the move. We get a 500 pointer range and then we shift further. So now the next target for the Nifty is 24,500. And that was the support in the previous, before we started this correction. And overall, 24,800 remains the big, massive resistance, above which the trend changes from consolidation to a momentum breakout. So the structure is positive, waiting for even Bank Nifty to cross 50 and 800. So there is clearly leadership in the larger names there.
It has to be mentioned that HDFC Bank and ICICI Bank are actually relative underperformers today. The move is largely led by financials per se. But Soni, let's get in some closing trades as well from you. Okay, we seem to have snapped that line. Naresh, what about your closing ideas?
So looking at a bounce back trade in Container Corp, the stock has corrected from 1150 all the way down to 750, 770 levels. It's made bottoms around this area for the last 3 months. So the base is set, expecting a larger bounce back towards 850, 880, a stop loss below 780 for this one.
The point that Aisha was saying, that Reliance seems to be a bit of an underperformer. I mean, in the sense that rest of the market is firing away, that stock is still not up, and that comes after the massive underperformance in 2024, wherein the stock was down, I think, 7-8%. Does this clearly give you the indication that stock is going to be under pressure in the very near term, that is the next 1 to 3 months? Naresh, question on Reliance?
Yeah. So if you look at Reliance Industries, even now, after today's bounce back, the stock is still down 20 to 22% from the highs which it made in July. So this is the largest fall, and it remains in the top 3 weights of the index. So out here, we made a new low recently. So the low in November was, say, closer to 1217. We made a low just 10 bucks, 10, 15 rupees below that. And we've seen a recovery. So this is generally a classical indication of a positive divergence. In this case, we would expect a retest of the interim highs, which would be closer to, say, 1330, 1350 levels. And if that crosses, then we say the underperformance trend of Reliance could change. For now, it will need a much, much larger bounce back to become an outperformer in the index. But for now, a bounce towards 1300, 1330 would be normal.
Okay, that's the take on Reliance and, of course, the mid-cap ideas. I think Soni is back with us. Soni, what mid-cap strategies would you recommend right now?
So I'll have 2 buy picks. The first would be a buy in CESE. This stock has seen very strong move above its 20 and 50 exponential moving average, sustaining above it, and has been adding good long positions today. So CESE is a buy at current levels with a stop loss of 185 and a target of 195 to 197 can be seen. The second buy is in Avenue Supermarts, that is DMart. So DMart has seen a good reversal from its lower support levels of 3,500 odd levels. One can buy in DMart with a stop loss of 3,540 and a target of 3,700 can be seen.
Taken on that note, we'll slip into a very short break. Don't go anywhere. We'll be back tracking the markets when we come back after this short break.
Back with closing trades, and what a move that you're seeing by the markets today across the board, not just the Nifty, which is now holding up a good 350 points, and we made it to the 24,140 mark in trade. But other than that, even the broader end of the market, it's extremely healthy. You've got a count of 189 to the advances, with a minuscule 9 odd stocks standing to the declines right now. So that's giving you a great amount of confidence that it's pretty much an overall move that you're seeing. And after many days, I can say that all sectors are in the green, led by cement, automobile, financials, FMCG, the new age stocks, technology. They're all the ones which are the winners today. The relative underperformers, or relative performers, I should say, are only pharma, media and power names. Other than that, Sun Pharma is the one which is a laggard today. Britannia is also seeing some, somber moves. And you're not seeing much of a move from an HDFC Bank or an ICICI Bank. The move in the Nifty financial is pretty much bereft of any contribution from ICICI Bank, at least today. Soni, do you see a scenario play out wherein HDFC Bank and ICICI Bank, while may have been leaders year to date, or rather last year, within the Nifty Bank, could they actually consolidate for some time now?
Absolutely. In fact, I think HDFC Bank has actually shown very strong rollovers for Jan series, and it is on the longer side. So it is right now consolidating in a range between 1780 to 1820. The moment it recrosses this 1820 mark, you can see it again testing or moving towards its higher levels of 1860 plus. So I think that's the level to watch out for. This is actually a good zone to accumulate and initiate a long strategy in HDFC Bank and hold on with a 1780 as a stop loss and look for targets of 1860.
So that's the take coming as far as HDFC Bank is concerned. Sunil Subramaniam also joins us on the show right now. Sunil, hi. New Year's greetings to you. And the New Year's greetings are clearly visible on Dalal Street with the kind of great momentum which is at play right now. It's coming in from the auto sector with big moves in Eicher, Maruti, M&M, even TVS Motors for that matter. Would you perhaps join the party and buy the auto stocks?
I think so too, because I think this indicates that the festival season buying was good. Part of the sales you should account for because the December end products, from this month on, you'll start getting the New Year's products. So obviously, there would have been some amount of discounting. So we'll wait for the earnings season to see what is the level of discounting. But apart from that, I think the coming year with the fresh launch of EVs and SUVs will continue to harbor good times for the auto industry. And I think the sustenance of the K-shaped recovery, I don't see that K translating to a U or V yet, which means the high-end segments and all that will still continue to dominate the market. And I think auto will be a key beneficiary of that.
Right. So Sunil, curious to know, what are some of the buy ideas that you've got for our viewers for 2025?
I would place discretionary consumption at the top of my pile. And it's a broader definition of discretionary consumption where I include consumer durables, I include auto, and I include realty. So this would be a top pick for me. The only part of the consumption part which I'm still hesitant about is the FMCG and the mass consumption pack. There, for me, the budget will be a key trigger. How far the budget tends to tilt towards populism through tax cut, giveaways, bottom of the pyramid would mean the FMCG and bottom would recover faster. So I will stick to discretionary consumption, broadening it to consumption based on the budget. That's my number one pick. The number two pick would be the BFSI space. When I say BFSI, I'm not talking banks. I'm talking about the entire lending value chain of NBFCs, gold loan companies, small finance banks, PSU banks, and private banks. But I also want to focus on the left-hand side of the balance sheet, which is the investment savings pool. So for me, asset management companies, insurance, both general and life, broking houses, market infrastructure companies, as well as wealth management outfits, all of them I see are good. Because I think it's a key year. I expect our per capita GDP to touch the $3,000 mark for the first time during the course of the year. As the GDP numbers come in and inflation numbers come in, as you know, it's the nominal GDP divided by the population. That I think if it hits 3,000, it means it augurs very well. And I think that the K-shaped that we talk on the consumption side will also reflect, because the higher income people will also not spend so much, but will also save and invest a lot more. So I think that's the story for this year. For me, the two picks are consumption and BFSI right from the beginning of the year.
Consumption and BFSI, that's where you're sticking your neck out. But Naresh, what's the sense on cement as a space right now? Shree Cement is up 5%. You also have India Cements doing quite well. JK Cement is up. Ultratech is up in the trading session. Grasim, which is a bit of a play on the holding company, is also in focus. And there were channel checks that suggested that not only the December price hikes were well taken, there are further price hikes which have been taken in the month of January already to the tune of 5 to 10 rupees. On the charts, how does the cement pack look?
So starting off with Ultratech, that's the one which would give a strongest indication once it sustains about 12,000. Apart from that, we are still in a sideways consolidation. The two names which really show a lot of strength is first is JK Cement, which is close to a breakout for the last 6 to 8 months. It has made multiple attempts around that 4,700, 800 mark. If that sustains, that should be the leader. Second one is Ramco Cements, which made that huge move from 900 to 1,050, which was the previous high, and has dipped a bit in the last few weeks. That could be a good entry point. Eventually, that could be a stock which could be the first one to go into new all-time highs. So out here, the structure is shaping up well for a lot of these names. Eventually, they'll break out sometime over the next few months. But the two names which could break out first could be JK and Ramco.
JK and Ramco Cement, those are the two stocks that Naresh is betting big on. Just taking stock, of course, cement is definitely a big mover today. So are financials. Even FMCG has actually made a comeback. But Sunil, what is your own take on pure play FMCG, staples that is, and whether or not they should be looked at right now, and has the correction played out duly?
I think I would wait for the budget, because I think that this budget will be a little more populist. I used the word development populism. And to the extent that they do that, and so far the April to November, the fiscal deficit being at 52%, and if you see the capex year on year has dropped, but the tax collections year on year have risen. So it means government is fairly comfortable with this year's fiscal situation that might empower them to tilt a little bit towards consumption in the budget, given the fact there are two huge elections over the next couple of years in Bihar and Uttar Pradesh. That would be a trigger for me from the top line for FMCG. But at the same time, from the bottom line, see, food inflation, wheat prices are a key part of the FMCG pack on the margins part. So I would say easing of that inflation is important, not only from a margin perspective, but at the top line also. Inflation has been hurting the consumer surplus. So that's one of the reasons that FMCG related products consumption has been postponed. Now, if you say inflation easing not only helps the FMCG margins, it will also help the top line by increasing sales. So inflation is the next key trigger to watch out for. And the third, I would say, part of the FMCG bottom of the price is dependent on crude. So I think crude prices tending to ease with Trump coming and probably pumping more oil and talking down oil prices. I would say that's again be good for FMCG margins. So these three key triggers for me: the budget, inflationary trends, as well as the crude food prices would take a call. So I'll probably wait a month, and the earnings season also will be well underway. The guidance from the FMCG companies and how they see the year is also probably a critical factor. So probably a little bit of a wait before I really strongly enter the consumption FMCG basket.
Guidance on some of the FMCG companies, but there is also the expectation that guidance from some of the IT companies might be high. HCL Tech and Infosys have been named by CLSA that they could be the candidates that might increase the guidance. We'll pull up the Nifty IT pack and actually individual names that I'm talking about, HCL Tech and Infosys, shortly up for you on the screen. Sony, what's your sense on the IT pack, and what within the frontline IT names would you care to buy?
Sonia, IT is showing very strong support. Anyway, towards Infosys, one can see, because it has given a very strong breakout today on charts, intraday charts. It has been adding very good positions on the longer side today. Plus, it has also given a very strong option chain breakout. So one can focus in Infosys. It is heading towards a 1980 to 2020 level. So that's a range that it can test from current levels. One can add at current levels, and on any small declines up to 1940, keep a stop loss of 1920.
Okay, so that's a take coming in on the IT pack. But hold that thought. We do have Ravi Dharamshi's, take on consumption as a basket as well. Hear out what he told us earlier.
Quick commerce is probably taking away a lot of that growth towards itself. So that is impacting the growth of the traditional distribution outlets. So that, I think, is what is ailing the consumption. However, there are certain pockets within consumption that you can see where there are signs of revival. Building materials segment, which is dependent on this real estate cycle, will start seeing an upcycle as well. So, and that is kind of a quasi-consumption place. Once you've done bought a house, and then you're going to spend a lot on things that go inside a house essentially. So consumption is in a phase of transition. I won't say we are on the verge of a revival, but I think further deterioration should stop somewhere around here. And maybe stocks from a longer term perspective have started looking more reasonable than they have been in the recent past.
Okay, that's the take coming in on consumption and where that may be headed. Sony, what is your own sense? You think the likes of ITC, Unilever, etc. could see any comeback, or do you think this is a sector per se which is best avoided right now?
I think that story held on to, till these December series, but then we've seen a change in the data pattern for the consumption space. So we've actually seen positions taking, adding up on the longer side. There are stocks like United Spirits, then you've got Radico, you've got ITC, Asian Paints, which have actually shown a good movement in the first start of the Jan series. So I think the best over here would be to focus on in ITC, which has actually been looking strong on daily charts, and the stock is heading towards a 520 slow mover again, but then that's the level to watch out for, and on immediate basis it has a good support of 475.
Coming in, any other top recommendations that you have for our viewers, Sony, in the sense that the BDSE trade even at the index level, or any stock specific calls?
From index levels, certainly I think Bank Nifty is looking like a good BTST. One can actually buy at current levels of around 51,600, and on NB declines up to 51,400. So this 200 points range for Bank Nifty is a good level to enter and initiate a buy strategy. It is crossing, it's at least approaching to cross above its major moving averages. The target for Bank Nifty would be 52,200 and 52,500. So by tomorrow, I'm expecting that it can actually test 52,200 odd levels. And from immediate levels, one can maintain a stop loss of 51,200. So look for BTST trade in Bank Nifty towards 52,200 by tomorrow.
Sony, great to have you on the show. Thanks as always for taking the time out. Naresh, let me come to you quickly for your BTST ideas too.
So that would be a buy on Concor. The stock looks like a case for a strong bounce back, deep correction done, multiple bottoms here. Stop loss at 780, target price of 810. Second is a buy on M&M Finance. We have seen good recovery today in the whole NBFC space. M&M Finance looks interesting, good volumes here. Stop loss at 272, target price of 285.
Okay, so those are some of the BDSE trades that one really needs to watch out for. But it's a very, very stellar rally that we have at our hands. I mean, 24,200 scaled quite effortlessly is at least what it seems on the screen right now. The fact that the Midcap index is above 58,000, Sensex is up 80,000. That's something to really watch out for. But, Naresh, today it's clearly the large caps which are leading. I mean, there's a gain of 2% on Nifty versus small cap and, mid cap, which is sub 1%. Do you anticipate that in the near term that's going to be a bit of a trend?
So we've been seeing this flip-flop in terms of the way one day we have small caps do well. So yesterday we did not see Nifty do well, but yesterday itself the small cap index had broken out of a 5-7 day range, very similar to that 24,000 mark on the Nifty. So today it's taken a pause, but if you pick up the last 3 sessions, they've both made a similar move in line. So overall, the structure is same. Given the lesser correction which small cap indices saw, as well as hitting a new all-time high, the outperformance would continue in small caps, but in the near term, large caps could do better for the next few weeks at least.
But capital goods as a sector, would you bet on that, Sunil, because there's a note coming in from Jefferies today talking about how the capex is again likely to be up in double digits in the budget. There's, as it is, a question mark whether the government will be able to spend the full capex amount or not. Some are calling that there's going to be a deficit of 10% in budget. Some people are calling it that perhaps they are going to be lower than 20% than what they had planned in terms of capex spend and the actual spend. What's your take on where capex and industrials are headed?
I'm not in agreement that this year the government will find it hard to achieve the 11 lakh crore that they had budgeted. So you're probably going to see a 10-odd% drop in the real estimates. And to then do a double-digit growth on the back of that is eminently possible. So the budget forecast will show a nice, strong growth in capex, though this year they will fall short. But the capital goods story is not just about the government. I think it's time the private sector really came into play. And there, for me to really invest in the capital goods segment, of course, the budgetary forecast is important, but I also like to see the broad consumption pick up. See, this K-shaped recovery means that high-value goods, which are low on quantity terms but high value, are the ones driving the consumption story. So your capacity utilization is not greatly breaking out from the 75, 76, 77 levels. So if the budget has a little bit of populism, you see consumption revival happening at the bottom of the pyramid, then capacity utilization will step up, then the private sector capex in the last quarter could step up. So the consumption trigger, right, the track on the consumption volumes is a key driver to decide on the cap goods cycle. So I would say partly on the budget, partly on the mass consumption growth, would be the time to get into the cap goods cycle. So keep those triggers in mind and watch it, and then invest in that.
Right. Sunil, just an extension to one of the themes which has worked very well throughout the year, and that's been the capital market theme, right? I mean, be it an Angel One, a CDSL, PSC, the entire pack held out very well. Do you think that's going to be the case going forward too?
I think so. I think there's a huge potential there which has not been tapped. Look at the mutual fund penetration. Yes, you have 12 crore stock market investors, but on a 140 crore population. And the encouraging part there is increasingly the wealth mix as well as the market purchasing is moving to the tier 2 and tier 3 towns, right? Thanks to mobile penetration and the news flow. So I think that's a huge story. We've just got the beginning of the cycle last year. Yes, the market has discounted a lot of the growth. So valuations probably are a little bit on the higher side. But if you stick with it for the medium term, I think capital market related plays are a huge, big story up move for India. And I think you should stay invested in that.
In the meantime, let me take it across to my colleague Ria, who's joining us to talk to us about what the industrial outlook is for the year 2025 as per Jefferies.
Well, yes, so Jefferies has come out with a note outlining the industrial outlook for 2025. What they've said is that the election result was a negative surprise with the BJP coalition coming in versus the standalone majority that we were expecting earlier. In terms of the order inflows, the flow growth has tapered off in post-elections, and investor concerns have increased in terms of growth and valuations that have emerged going ahead. BJP's Maharashtra election majority has actually allayed some concerns, and the budget going forward will be a decider on government capex, how it's going to continue going forward. They do remain constructive on the sector, but power and defense stand out in terms of the industrial sector. The top picks remain Siemens, HAL, Thermax and L&T. For HAL, the target price is rupees 5,500. For Thermax, it is rupees 6,100, and for L&T, it is 4,600, and they've maintained their buy rating on all of these stocks.
That's Jefferies' take on where they see the entire capex theme emerging. And in continuation, Sunil, with what you were talking about capital goods, defense, railways, and, especially budget-sensitive kind of sectors such as these, where do you think they're going to head in the next quarter or so?
I think they're going to be consolidating. Because honestly, for the government, if they want to reallocate a little more towards the mass consumption, maybe give a little more tax cuts to the middle class, that money has to come out of somewhere. And I think defense is not a critical expenditure. Now, power is something that they've already invested in. They'll continue, but it's the private sector power that has to pick up. It's not so much of a government driven for this budget. So I would say that if at all the knife comes down in the mix between revenue expenditure and capex, on the capex side, it will come on these things which are not critical. They're important for the country, probably not urgent. So whereas the government would try to push more employment-oriented capex, more development, populist-oriented capex kind of thing, like rural irrigation, and those kind of sanitation and water and all of those things. So I think defense and power, I would rather again wait for the budget to see the fine print and then take a call. Because while valuations have corrected since the peaks of September, they still are fairly rich, I would say. So hold off, I would say, for the budget to get clarity. You wouldn't lose much. There will be a consolidating phase, and then take a fresh call on defense and power and railways and all of those government-related capex items.
And the budget, I think Prakash was just tracking a meeting which is going to happen at the North Block, where a lot of capital market participants were going to join, and they were going to propose to the government as to what their expectations are from the budget. If we do have Prakash, maybe we can take it across to him. Prakash, tell us what exactly is on the agenda, who's attending?
The Finance Minister, in her pre-budget consultations in the industry, will meet with the representatives from the capital market and financial sector today. Various recommendations will be made before the Finance Minister just ahead of the Union budget. We're given to understand that the reforms related to financial sector and the capital market will be the focus. In fact, demands may be made to provide incentives to increase infrastructure credit and deposit growth going forward. Along with that, the financial sector is likely to seek operational incentives for sunrise sectors. When it comes to capital market, we are given to understand that the industry is likely to seek tax relief to reduce transaction cost in the capital market. In fact, rationalization of STT and CTT will be sought to reduce a tax burden on investors. Along with that, we are also given to understand that the representatives of NBFCs will seek relaxation in compliance requirements to spark growth. In fact, demands related to cybersecurity and digital infrastructure are likely to be made for the capital market and financial sectors.
Okay, that's what we're anticipating from the capital markets meet in the likely pre-budget meeting with the finance minister. Let's just revisit how we're settling down for the day and what a Thursday it's turning out to be. Finally, seems like everyone's back to business, and you are seeing quite a good move. 385 points up in the green and still counting upwards. It's 24,283 on the Nifty futures as we speak right now. iShares, Bajaj Finance, Maruti, M&M, these have been your biggest contributors to the move today. And it's surprisingly coming in at the hands of relative underperformance from names like HDFC Bank, ICICI Bank. Of course, there's DRL, Cipla. And, to think of it, Pharma was the one which was actually the safe haven the past couple of trades. But that's the one which is a little bit of a laggard. But Naresh, given how we are winding up for the day, what levels would you now look out for, and what do you anticipate trade will be like tomorrow, particularly for Nifty Bank, Nifty Auto, and of course the Nifty 2?
So we could see a little bit of a fade off in Nifty Auto, and that could be a buying opportunity in some of the names. Nifty Bank could be the one which could break out tomorrow. So expecting some more follow-up action on the Bank Nifty. And Nifty continues to be on track for a move towards 24,400, 500. So Bank Nifty could be the trade for the next week.
Could be the trade for the next week. Just watching out for that one. 3 minutes left to the closing sessions, and I guess a lot of the bulls would be saying today why the markets are closing at 3:30, given the fact that the momentum has been really strong. We're at the highest point of the trading session right now. Possibly we can scale up 20 more points to hit that 24,200 yet again. We did manage to hit that on an intraday basis. The real star performer today is clearly the auto pack, and that's leading from the front with that 8.5% gain coming in. Snehi, auto index at what, a 7-month high in terms of the biggest intraday move, right?
Very good moves coming in all across the market. We'll highlight the auto sector as well. Before that, let's just quickly take stock of what the benchmarks have done today. Nifty is up 1.8%, roughly 2% from the day's lowest point, also 500 point uptick from the day's lowest point coming in for the Nifty. Looking very good at that 24,180 mark. Not only we've managed to cross 24, but comfortable above the 24,100 as well. Sensex also in tandem with Nifty, 1.8% higher, inching very close to that 80,000 mark as well. Broader markets then very smart up move coming in on the Nifty in the last couple of, Nifty Midcap in the last couple of minutes. 1.2% higher is where that index is also. Small cap also in the green, but nonetheless underperforming its peer benchmarks. If you take a look at the advance decline ratios, steeply in the favor of the advances today. Nifty Bank has also managed to hold on to some stellar gains today. A 1% uptick coming in on Nifty Bank as well. Let's take a look at what the India VIX is up to, because the VIX has cooled off significantly today and come back below the 14 level. So looking very good on India VIX as well. A roughly 6% cool off coming in on India VIX today. Sectorally, like Anisha was mentioning, we have to talk about autos today. It's been a through and through winner in today's trade, and in the fast lane today has been autos, because 4% higher just on intraday basis is where the entire index is. Very stellar numbers coming in from iShares Motors. You have Ashok Leyland that has done very well. Maruti has beat expectations. M&M, all of these companies have come out with good numbers, and these are your top stock winners when it comes to the auto pack as well. Followed by Nifty IT. Remember, you had a negative brokerage route coming in this morning on Nifty IT, but the moves have been completely opposite, because 2% uptick coming in on Nifty IT as well. So that's also something that's looking good right now. Followed by FMCG, Realty, Bank, Metal, Energy, PSU Banks, Pharma. All sectors barring one. Nifty Media are also very nominally in the red. Rather than that, all of these sectors have clawed in some stellar gains in today's trading session. A couple of stocks that merit a separate shout out today has been Railtel, because very stellar moves coming in on an intraday basis for this stock as well. They've received an order of 78.4 crores from Bharat Coking Coal, so that has been very good for the stock. 4% uptick coming in. Slightly simmered down on the run up that the stock was seeing, but nonetheless has done pretty well on an intraday basis. CSB Bank, strong updates coming in. Punjab National Bank also very good set of quarter 3 updates coming in. So both of those stocks have been in focus on the back of a couple of quarter 3 updates that we've got from the entire banking and financial space. The financials have been in focus today largely. Hyundai Motors was in focus today. The company has revealed the much anticipated Hyundai Creta electric version. So that stock was also doing well, roughly high by about 2% in today's trading session. On the back of a couple of brokerage notes, then the stocks were in focus today were Muthoot Finance. Morgan Stanley has maintained an equal weight with a target price hike to 18.25 now. So Muthoot Finance has done well, a 1.5% uptick coming in on that stock. You have Citi on Petronet LNG. Petronet LNG was a stock to talk about today. Deep shade of red coming in, deep cuts coming in for that stock in today's trading session, where Citi has opened a 90-day negative catalyst watch. The company has also issued clarification, but nonetheless, the stock continues to tank in today's trade. Bajaj Finance on Citi, positive note coming in. They've opened a 90-day positive catalyst, so a good move coming in on Bajaj Finance today. That's also something that has held up the index quite smartly, 6.5% higher. Jefferies and Citi were bullish on Kotak Mahindra Bank, and the entire cement space was in focus on the back of the Investec channel check. Larry, this is how we are ending today's trading session very comfortably above the 24,100 mark. Rather, 24,150 is also the level that we've managed to cross today. A roughly 1.8% gain coming in on the Nifty just on an intraday basis. A very good Thursday coming in for us today.